The Money Café is proudly brought to you by Intelligent Investor, Australia's home of value investing. Get Alan Kohler's weekend brief, in-depth economic analysis, CEO interviews, and the latest market insights. Find out more at offer.intelligentinvestor.com.au/Money Café.
Hello, I'm Alan Kohler, Editor-at-Large of Intelligent Investor and Finance Presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder advocate.
And we are?
We are the Money Café, boss.
Good morning,
Another
Stephen.
wild week in the world. How are you holding up?
Yeah, I'm not getting a lot of sleep at the moment, but anyway, there's so much going on, and it's very interesting, and I'm looking forward to getting stuck into that. But I just wanted to tell you, I was in Ballina last week doing a speech for Business New South Wales at the Ballina RSL, and I don't think I've been in a New South Wales RSL for ever, probably. And
lots of pokies there.
Well, it's a casino, basically.
Yep, exactly.
And it's
right.
a Taj Mahal. It's unbelievably big. It's incredible. What a place. But anyway, the Premier, Chris Minns, gave a video greeting to the people in the room, and he said, I'm glad you got Alan Kohler there because my wife and I are big fans of Money Café, and we listen to it every
is
week.
That right?
Yeah.
Oh, there you go.
There
Hi,
you go.
Chris. Well, I'll stop calling him Pokey Minns then.
Pokey,
So,
do you call him? That's very unkind.
Oh, look, a mate of mine ran against him in his seat, who was a Clubs New South Wales whistleblower, Troy Stolz. So we got nowhere with New South Wales Labor in terms of winding back pokies, and New South Wales is the pokies capital of the world. But if it's a Money Café listener, all is forgiven.
Yeah, g'day, Chris and Mrs.
Hi, Chris.
Minns.
Welcome, Mrs. Minns. That's right. Well, I will say he is, along with Peter Malinauskas, he is the most effective Labor state political figure in the country. People are saying they like his centrist, right, pragmatic approach. But boy, no one can get near the South Australian bloke. What a win that was.
It was. And also it was a win for Pauline Hanson, wasn't it?
An enormous win for Pauline Hanson. I think if that happened in Victoria, I think that One Nation would potentially have 20 seats in the upper house and the lower house, so 12 in the lower
with that
house
percentage?
and 8 in the upper house. Yeah, with a similar, 22% vote. So it's enormous. It's an earthquake, and so I'll be and there's going to be a deluge of people queuing up to run for them in Victoria now, including anyone who gets rejected for pre-selection in the Liberal Party. The Corey Bernardis of the world, the Mark Lathams. She's a great sponsor of has-beens who get to come back. So who will those has-beens be in Victoria who get a second life? Just jumping on her 20% primary.
Yeah, well.
Anyway.
And it's hard to see that going away in a hurry.
No, well, I mean, you're talking about happiness, Alan. You've got this sort of happiness surveys that you ran on the news last night. It is, and you said Australia's happiness is falling, and I would say there's a direct correlation between falling happiness in Australia and the rising One Nation vote.
Well, that's why I talked about it, and I had a graph of the falling happiness in Australia. And I think it's true. Obviously, there's a correlation. And the happiest country in the world, as usual, is Finland, which has a high level of taxation. And so I think the proposition that happiness flows from low taxation is incorrect, clearly.
But I think it's also the level of public services. So it's high tax, and then it's a big safety net, big social safety net.
Well, that's
so
right.
No one's left behind in Finland. So everyone collectively is quite happy because they share the love around.
That's right. And the services and infrastructure and so on flow from a level of taxation.
And how happy are the Iranians at the moment, do you reckon?
Oh, not happy at all. I mean, the whole thing is supposed to encourage a regime change and make the people against their leaders. They're probably against their leaders, but they're now more against, I would suggest, the United States than they are against their own leaders, because they're being bombed by the United States, and I don't think that's very encouraging of appreciation by the Iranian people. So I just think they're
and Israel. I think because Israel. Did you see overnight Israel said that they've basically taken over 10% of Lebanon, and they've been trying to depopulate it, and they're going to sort of create an artificial boundary as a sort of a buffer zone. So people sort of forget.
So I think this is
two wars. It's a Lebanon war and it's Iran war. It's two wars or two fronts to the war that are going on at the moment.
Yeah, so it seemed to me the fundamental problem for the oil price and inflation and the global economy is that both Israel and Saudi Arabia see this as a historic opportunity to change the balance of power and to reshape the Middle East and basically to remove the Islamic regime in Iran. That's what they're seeing it as, and they won't give up until they've either done that or basically died trying. And I think that, because the New York Times is reporting this morning that Mohammed bin Salman, the leader of Saudi Arabia, has been in Washington for a few days, if not a week, talking to Trump all the time and trying to persuade him to keep going because of this historic opportunity. And Israel clearly sees the same thing. And so while those two countries are still, going at it, whether the US pulls out or not, the Straits of Hormuz will remain closed, it seems to me.
And there's a fourth old man. There's a fourth old man in the coalition of the willing old men, Rupert Murdoch. Did you see that Bloomberg piece over the weekend that Rupert was influential and was urging Trump on multiple occasions to launch into Tehran and to join with Netanyahu? So people like J.D. Vance were against it, and Rupert, just as he was the chief propagandist for the 2003 Iraq War, and I was watching Fox News a little bit this week, and they're just all over it. It's just a complete repeat of 2003. They're just absolutely get in there, go harder, we're winning. This is, it's just totally on board the war. And I'm puzzled why Rupert is such a warmonger, why he's urging Trump to do this. Because it's not helping anyone at the moment.
No, I don't know why. Why would he do it? I mean, you had a big go at him in Crikey yesterday, didn't you?
Well, I just said that he's got a history. I mean, he was against the Vietnam War back in the day. I mean, Blackjack McEwen rang him up the night before the decision was announced to apologise and say, look, I'm sorry, I know you won't be happy, Rupert, but we're sending troops to Vietnam. I know you're against it, So, and then he's just gone full circle. And, I don't know. But I find it very puzzling. But, and then you got Trump's sort of manipulation of the markets. I mean, when he came out and said we're having discussions and we're going to delay hitting their infrastructure for 5 days, I mean, I think that was just basically made up. And the futures were up 1,200 and the oil price fell $8, and there's all sorts of talk of people who had the tip, who were taking market positions that profited from the jerking around. So, but you just can't believe anything Trump says. From what
apparently that's right, that somebody did jump into the market and make a lot of money out of it. So there does seem to be have been a bit of insider trading there.
And I wouldn't be surprised if there's more and more troops being moved there. I wouldn't be surprised if there are some troops on the ground within a week or two as part of an operation to try and get the Strait of Hormuz opened. I really wouldn't be surprised. I mean, why would you be sending thousands and thousands of troops?
Yeah, well, the Wall Street Journal is saying that Pentagon's deploying 3,000 airborne soldiers to the Gulf this morning. So that's, as you say, that's happening. I mean, the problem is that opening the Straits of Hormuz is much more difficult than that. Or are they going to sort of occupy it? And if so, that's going to be a long-term, very messy occupation. There's also talk that they're going to occupy the Karg Island, which is where Iran processes its oil and exports from. I mean, sort of doing stuff like that basically invading the country and occupying part of it, whether it's the Iranian side of the Strait of Hormuz or Cargo Island, I mean, that is basically going to war.
And it's 92 million people in the size of Queensland, so you can't occupy or invade the whole country. So it would just be elements of it. So you'd start with the southern border, where you've got people launching drones and missiles, and you'd have a landing there, and you'd take a piece of it to try and neutralise any attacks on ships. But there's such a long border where you would have relative proximity to ships passing through, and with their, as you wrote in the ABC this week, with their dominance on drones, they would just it'd be virtually impossible to suppress. If they want to hit ships going through the Strait of Hormuz, they will be able to do it. So it's not until you will have an agreement with whoever's in charge with it in Iran that you can open the strait. And I don't see how you can do it in a hostile way with troops or bombing from the air. If they want to shut the strait, they can shut the strait. Ship owners, insurers, people just won't go through it. But some ships are getting through because they're paying a toll. Like ships going to China. So it is partially open. They want to get a Suez Canal type toll going like the Egyptians benefit from, which is another interesting long-term play, because it is the world's most vulnerable choke point, isn't it, effectively? Well, that's what it's emerged as.
Yeah, that's right. So I mean, Goldman Sachs put out a new oil price forecast yesterday, which was that the price will go to $115 a barrel. This is West Texas, which is currently under 100. If the Straits of Hormuz stay at current level, which is 5% of traffic getting through, if it stays at that level for another 6 days, then that's what the price of oil does. I mean, I imagine if it looks like it'll be 6 days, the price of oil goes straight to that level. If it stays closed or at 5% traffic for longer than that, it goes to $150 a barrel. And so, and the bloke from BCA Research, Marco Papic, who I quoted on the news last night, said that if this keeps going, it'll be a pandemic or COVID-style shutdown of the global economy. So we're on the brink of something really serious.
On the news. Is that a bit catastrophizing? Scaremongering? COVID-style shutdowns. I mean, I guess you've got fertiliser. I mean, people are already saying that if the fertiliser market gets disrupted, you're not going to get crops getting planted. We've seen Reese has already just jacked up their plastic pipes pricing by 36% because of the whole sort of chemicals and everything that feeds in to other parts of the economy. And as we're seeing, if you haven't got fuel, everything shuts down. So fuel is the absolute lifeblood of the economy, and particularly diesel. Industry runs on diesel. So, and we're already seeing a few stations run dry in Australia. So, but if it's only 20% of the world's supply, surely the other 80% can just be, repurposed, and we'll have some, demand will fall if the price goes high, and then the other 80% has to get repurposed. But LNG, it's even more. It's even bigger share of the global LNG that goes through there. So
yeah, that's right.
And you are seeing some power plants being repurposed from gas to coal. So you are getting a bit of substitution on the gas coal front, but there isn't the equivalent to do that with diesel and with fuel, say for millions of EVs, but you don't have the EVs in the trucking space. With aircraft, I mean, airlines are starting to reduce their flights. Oh boy. I bought some Virgin shares this week. I paid $2.50 a share. I thought they'd crashed from $3.27, and they kept going down. I got hurt catching a falling knife on that one.
Oh, jeez. I hope it wasn't
well,
too
I've
many.
got to go to their
Stephen.
AGM.
I hope it was...
No, it's $500. I've got to go to their AGM anyway in October. So normally I just buy it a month out. But I thought, I'll be going in October anyway. I'll buy them now. But I've got to do the same for Qantas. But I took my buy order off Qantas because I'm worried they could go to 4. They were 11. They got down to 8. How low can they go?
Well, I mean, that's talking about the stock market. I mean, the reaction so far is not that severe. I mean, yeah, it's down a fair bit, but it's not in Australia, it's not really a correction yet. It's the market is not predicting the sort of thing that guy Marko Papic was talking about, some sort of global shutdown. That is not what the market's expecting. They're expecting it to end fairly soon, and I think that's I just don't see that. I think it's going to go on for a while. So I think you're right. I mean, the market's going to keep falling, I think.
I agree. I think it's over-optimistic. And but by jingo, these rising interest rates, I mean, if you're wondering why Australia is not a happy place, I mean, Iran, rising interest rates, were you surprised they did 2 months in a row?
Yeah, and apparently,
lifting official rates?
The market thinks it'll be 3 months in a row on balance. I mean, I think it's 53%.
Surely not now. Surely not now.
Well, yeah, but the problem is that inflation is going to go up as a result of the oil price going up. So the Reserve Bank's going to have to choose. If what you get is a slowdown in the economy and inflation rising, which is stagflation, the Reserve Bank has to choose which of the two problems it addresses, high inflation or rising unemployment. And it's supposed to deal with both, and it can't deal with both if they're both rising. So they'll have to choose one, and I think probably they'll choose inflation to tackle because they think that's the worst problem. So I don't know. I mean, I think at this stage the market is 53% odds of a rate hike in May. I mean, maybe that'll change if by the time they meet, the Strait of Hormuz is still closed and oil's 150 and it's looking like a recession. I think you're right. They can't possibly hike rates into a recession. But that's kind of.
And I think if oil does get that high, I think you'll see the government cut the fuel excise as a cost of living relief measure, like Morrison did back in the day. I think it was the Ukraine war. So that's a card they've got to play if it's a straight Bowser Payne question. But look, see, interest rates are rising right across the curve. I mean, the short end's obviously going up with official rates, but you see that the 10, as you wrote the other day, the 10-year is now above 5% in Australia. Hasn't been that high for many, many years.
No, that's right, and so that's going to have an impact on the stock market as well, because it affects the valuations of shares. So yeah, look, I mean, yeah. Anyway. Enough of all that unhappiness. What do you make of, speaking of unhappiness, what do you make of Anthony Catalano and what's going on there before we get on to questions?
Well, I think it's, you and I, there's not many of us journalists out there, Alan, who've taken a punt and started a media business. You were more successful than me, but he was 10 times as successful as both of us. And he was probably the most successful journalist entrepreneur in Australia. Probably made about 100 mil initially just with his property ad giveaways, which Fairfax had to buy. But you've got a part in this story because you were the editor of The Age who plucked him from the sub-editor's desk when his biggest experience was as a police reporter. And at the age of 27, you made him property editor of The Age. And he parlayed that into a property classified empire, and he sort of, he still owns the Canberra Times, the Newcastle Herald. He's a media mogul, and none of that would have happened if you hadn't made him property editor in 1994. So tell us about why you did that.
Well, because it was clearly going to be a good property editor. I mean, he understood property. He was incredibly ambitious, and I was interested in finding ambitious, talented people and putting them into positions of that were the right positions for them. And he was terrific. I must say he was a very good property editor, and he knew what he was doing. And you're right. I mean, I think you forget Christopher Skase, who did pretty well, a former journalist who did pretty well as well. Although it was all a bit built on debt, wasn't it? So it went badly in the end.
Yes.
For different reasons than Anthony's gone badly.
Well, the Catalano empire may end up fully imploding like the Skase Empire did. Plus, there may well be criminal charges, obviously, with the horrendous family violence allegations against Catalano. But well, I mean, you had a small part to play back in the day. You love doing the left field appointments, don't you? Like I remember you appointed Louise Adler as arts editor, and everyone was a bit, what's going on here? And then she's become a superstar over 30 plus years, and that was the biggest job. So what's your thing about plucking people? Left field appointments, they call you. Alan, left field appointments, Kohler.
Yeah, well, I wanted to shake things up. It was I was in a sense that was my job at the age, was to shake the place up, and I did that. I possibly did
you
it.
You were Conrad Black's
quickly.
man to shake it up.
Yeah.
You didn't do it too quickly. You did a great job. And you fought Jeff Kennett back in the day. You took on Jeff Kennett.
I did. And then he took me on. He got me sacked.
And he got you sacked.
No, he got me sacked.
So you and I can both have agreements about Jeff Kennett. So there you go. Oh, goodness me. Now, before we do questions, I was going to mention the European Free Trade Agreement. So you and I, if we wanted to be entrepreneurial again, we can no longer set up a feta, a Gruyere, a Ouzo business, anything with Romano or Bologna or Bavarian beer or Munich beer. Out. Banned. Can no longer do it under this European Free Trade Agreement. But we've got a little bit more access to their dairy and beef markets, although if you read the commentary, it's not enough. So the agrarian socialists in Europe haven't opened the door that much to Australian agriculture. A little bit. But it is interesting that the Europeans are madly doing deals all over the world. They've done the Indians, Indonesia, South Americans, and now us. And it's all because of Trump. Trump's gone mad. The rest of the world must deal together. So I think it's probably a good thing for the global rules-based system that Australia and the Europeans, after 8 long years, have finally got a trade deal done.
I think it is a good thing, yeah. I mean, look, obviously the Europeans have got what they want, which is, cancelling all those, stopping us having all those names of different foods. And, everyone in Australia, farmers and food business people are grumbling about it here, but okay, that's the price you pay for access to the market. And I think the access is going to be important.
Now, the POMs are not going to make us change the name of Victoria, are they? Or South Wales, New South Wales? I mean, there's so many things in Australia that are named after the colonialists. But I guess we have borrowed a few of their Europeans. The Europeans are different from the POMs. I guess we have borrowed far too many of their regions and their names. I mean, we lost Champagne and Beaujolais many years ago, but... I'm glad they've done the deal.
I think it's very interesting and weird actually that they changed the name of New Holland to New South Wales. Why South Wales? Why not New Wales?
What's so special? Why not New North Wales? Yeah, I agree.
Yeah, well,
I agree.
Yeah, I don't know.
Very
it was
strange.
Weird. Very strange. Anyway, before we get to questions, here's a quick word from our sponsor.
If you're enjoying the Money Café, take the next step with Intelligent Investor's Essential subscription. Right now, listeners can access a special Money Café discount, giving you Alan Kohler's Weekend Brief, the latest market updates and economic insights, plus exclusive CEO and Talking Finance subscriber podcasts, in-depth interviews with leading financial minds on business, the economy, and investing, all for just $297. It's everything you need to stay informed. Sign up today to get a limited edition Money Café cap plus 3 months of Intelligent Investor Premium. It's our way of saying thanks for being part of the community. Head to offer.intelligentinvestor.com.au/Money Café to claim the offer before it ends. T's and C's apply.
And also, before we get to questions, this is general. This is not personal financial advice. It's general advice, I guess, if you can call it advice. It's a podcast, and if you don't base any of your decisions on what we say, get proper advice if you're going to.
Correct. Mr. and Mrs. Minns, do not go out and do something having listened to today's Money Café.
No,
Get some professional advice, Mr. Minns. Now, Ted says, as you know, there is a growing cohort of Australians with strong on-paper wealth positions through property, but are increasingly constrained by rigid income-based lending models when seeking new credit. In effect, balance sheets are strong, but liquidity is tight. It is creating some odd outcomes nationally. People with significant assets are making overly conservative financial decisions, delaying investment and retirement, or drawing down long-term savings and super earlier than they would otherwise need to. With interest rates elevated and cost of living pressures persisting, that gap between wealth and usable capital seems to be widening. And then Ted goes on to plug a particular business, which I probably won't plug, but he's right though, isn't he, Alan, that we are asset rich and cash poor, and there is as many on paper rich people who don't have liquidity, and this, it sounds like, is affecting the way that a lot of people behave.
Yeah, but I mean, asset rich, but really, is it? It's not a liquid asset. You can't really. It's not like owning shares or something else. Owning a house, you've got to buy another house. I mean, it's sort of. I think it's illusory wealth, and so I mean, I'm pretty sure the banks are keen to lend as much money as they can. I mean, I don't think there's anything. I think we can be confident that the banks are doing the most lending they can possibly do, and they're bad debts.
They're income obsessed. So if you go to the bank and you say, lend me some money against my $1 million house, well, but they won't lend you some money unless you can show them that you've got income as to how you're going to pay it back. That's the whole point. I'm saying they should do reverse mortgages, and they should lend. If someone's asset rich, they should lend a truckload on the basis that, well, if you stop paying us back, we'll liquidate your asset. I mean, that's the security they've got. Why do they have to so focus on income rather than asset backing when they lend?
Oh, I think that's fair enough. I mean, you don't want to have a situation where the banks are foreclosing on a whole lot of houses and kicking people under the street. They've got to make sure that everyone can afford the repayments. Goodness me.
Yeah. I mean, that's why they don't want to do it. They don't want to be kicking grandmas out of their homes to get a reverse mortgage repaid. Yeah,
I think that's a perfectly reasonable position to take.
Yeah, and I guess the other point is our super system is unique in the world. I mean, locking up so much of the nation's capital, and you can't access it until you're 60 at the least. That is a liquidity issue, where you've got all this money on paper, but you can't touch it until you're 60. So yeah, it means that people don't feel that cashed up because they can't access their cash. Anyway, it's the unique Australian way.
That's right. Lisa,
your turn.
We've got a couple of universal basic income questions, one from Lisa and one from David. Lisa says, I love listening to your podcast. As a Gen X woman, I learn a lot from your conversations. Lately, you've touched on the idea of universal basic income, and I'm intrigued. What if we consider that a UBI is not about replacing a full-time worker, but recognising that there are not enough jobs to work full-time anymore, and the idea of a 3-day work week is a better way to frame it? Is it possible to use a UBI as part payment for basic living costs, allowing many of us to move to a standard 3-day work week if we choose? I asked my old friend Gemini, who suggested it would cost between $250 and $300 billion. A snap. What a bargain. I mean, and then David talked about it in the context of modern monetary theory, and he quoted some bloke named Richard J. Murphy, who I don't know about, who was a strident supporter of UBI when implemented in a MMT framework. And so David suggests that many government stimulus efforts are half-cocked attempts to run elements of the MMT playbook. And if we're spending the cash running up the debt, increasing inequality with a spectacular failure to fix the top two or three priority public policy issues, what is preventing the wholesale adoption of MMT across all levels of government? So, I think the only way that they're going to come up with $250, $300 billion to give everyone a universal basic income is by just printing the money. I think that's correct.
Correct. MMT and UBI. I agree with David that they are connected. So you couldn't do a universal basic income and have a budget surplus. So you would have to accept perpetual deficits, and that's where the MMT people come in, which says it doesn't matter if you can print, you can just have perpetual deficits.
Yeah, well,
So I
of
guess
course it matters.
Yeah.
I mean, look, I've done a lot of investigation into MMT, and really, you got to pay interest on the debt. That's the fact. You know, unless you find some way to have debt that isn't interest bearing, the more debt you have, the more you're. I mean, already interest payments are the second highest. I think the second highest, or one, perhaps even the highest now. Item of government, category of government spending. I mean, it just.
No, but Alan, if you're
I just
printing,
think it's ludicrous. The whole idea is just completely ludicrous.
MMT. But if you're printing, can't you just print money and repay the debt? That's the whole point of it. Is that the federal government, we own $1 trillion. Okay, the federal government can just create money out of nowhere and just nominally pay it back. But if they did the Australian dollar would crash and there'd be a financial meltdown because there'd be a loss of confidence in the system. And no government, all these governments were printing during the GFC and particularly during COVID, but no one's ever written off the debt by printing. That's the thing that doesn't happen. And so we all nominally have this debt that will never ever get repaid. Is the $37 trillion US federal debt going to get repaid? No. Is Victoria ever going to pay their $160 billion of debt? I can't see that happening in the next 100 years. Can you?
No. So then the question is, well, okay, what about inflation? Because if you flood the system with all this newly printed money, whatever you do with it, whether you're repaying debt or you're just using it to pay people a wage for doing nothing, then obviously it'll be inflationary, I imagine. I mean, so look, I just don't think that it's that simple, and most of the people I talk to about who are true MMT, modern monetary theory people, they don't talk about it in terms of adopting MMT. They talk about it as being a description of the way the system works already, which is that governments do print money now in order to pay their bills, and then they use taxation to get money out of the system to prevent inflation. I mean, that's really what the core of MMT is, that it's not something you adopt. It's simply a description of the way it works, which is that when the government pays its bills, it actually just sends an instruction to the Reserve Bank to pay the bill. And the Reserve Bank, in order to do that, prints the money. And then the government, separate to that, imposes taxation in order to remove money from the system to stop inflation. And so MMT isn't, as far as I'm aware, something you just adopt. People don't talk about it as being, we're going to do MMT, which is that we're just going to allow constant, endless deficits and or print money to deal with debt and to just endlessly print money, because I think everyone would understand that that's going to be inflationary. And so that's the thing about UBI. I mean, if you just give everyone a salary for doing nothing, how does that work? Where does the money come from, and what does it mean for inflation? I think that UBI is fine as long as you're kind of restructuring the whole tax system in order to raise the money from whoever's making it, which is presumably the rich people who own the AI companies that are sending people out of work. I mean, and Lisa's... Sorry, go on.
I also thought that MMT, the biggest constraint on MMT was just the resources in the economy. And as long as you don't overly print such that the resources get scrambled for and there's massive inflation, you can print. And the other point is that as long as everyone's doing it, so if the Americans, because they're the world reserve currency, if the Americans are printing, and they've been printing massively, then that's a green light for everyone to do it. And the only reason you get the Zimbabwe or the Weimar Republic thing is that you get people printing currency when the others aren't doing it, and then their currency crashes, and that contributes to the hyperinflation as well. But if the whole world is agreeing to print lots of money, as long as they're printing to a level that's not causing a massive scramble and competition for resources, I guess conceptually you won't have a massive breakout of inflation, as long as you don't print too much.
Yeah, well,
but
that's right.
I can't see it working.
No, well, that's right. So MMT people agree with you, Stephen, that really it's what it's all about is the ability of the economy to produce the products that will be demanded by the people who've got the money. That's kind of what it's about. As you say, it's the resources, the resource base of the economy, the ability of the economy to produce the goods and services. And the problem in Australia is that the low productivity has meant that the output capacity of the economy is low. I mean, we have what they keep talking about, the speed limit of the economy, which is about 2 to 2.1% GDP growth, and which is why we've had 2 rate hikes this year, because the economy's hit its speed limit. And the Reserve Bank keeps going on about productivity being low, which is what the problem is. So really, you start to get down to, well, the only way you're going to do all this and have universal basic income and all that is if the productivity of the economy goes up, and maybe it will. I mean, people talking about AI. They're talking about huge increases in productivity as a result of AI,
and robots and self-driving cars.
Yeah, sure.
I mean, 6% of all jobs are driving. So if you take all those jobs out, you will have a massive productivity gain for the people who are controlling the self-driving cars and trucks and vehicles. But what will those 6% of the workers do if they're not driving?
Yeah. Macquarie had an interesting piece of research I had on the news last night about the use of AI by banks. And it did some predictions of how much staff cuts that the banks will do in order to get their costs down using AI. And the sort of base case, what they think is likely, is 18% reduction in staff. And as I pointed out last night, there's 185,000 people employed by banks. So 18% is 33,000 people.
So everyone can expect lower mortgage rates going forward and lower net interest margins because they will be able to smash their wages bill by 20%.
Yeah.
But pay massive license fees to the AI companies, presumably, all of whom are based offshore. So sack the local workers and pay lots of money to big tech.
Now you can read Ben's question.
Ben says, I've been struck by the decline in the price of gold over the period of the conflict in the Middle East. Down 25% for the month. For the last year, we've been told everyone is buying gold as a safe haven in an uncertain world. Wondered if you might be able to speak to what's happening there. Wasn't this meant to be the very circumstance for which everyone was buying gold? Well, I think you've got a bit to crow about here, boss, haven't you? Because you said it was a speculative bubble, and that's what it has proven to be.
Yeah, so in the second half of last year, it became a speculative asset, not a safe haven asset. And it was particularly for Chinese speculators, and it was mostly in the south, the south of China, and the Shenzhen and Shanghai commodities exchanges. They were, the Chinese were going mad for gold, and they were speculating like crazy, and it was a bubble, and it's burst. So yeah, I mean, so what happened as a result of the war in the Middle East is that all speculative assets were sold off, or what they call risk assets. It became a risk-off picnic, is what they call it, and that included gold and silver. Down they went.
And do you think they're going to keep falling though? I mean, like it is still a real thing that gold is a safe haven. So you'd have to think that it won't plunge as much as some other asset classes. But yeah, you're right. It can't go from 2,000 to 5,000 just because of Trump. Basically, it was Trump was considered the risk, but you're right. It was just a speculative bubble driven by a lot of ETFs, a lot of people moving away from US dollars and into hard gold assets. But do you think it's going to keep falling? People are pretty shocked by the fact that gold's come off 25% when it's meant to be a safe haven. I mean, in a shocking world, the crunch in gold has been one of the things that it surprised me. It didn't surprise you. You said this was going to happen. But do you think it's going to keep falling? Not that you're giving financial advice.
I think I think the froth has come out of it. I really don't know how far it falls, but it was rising pretty strongly before it became speculative last year. And the reason for the rise was largely central bank buying to replace US dollars and US treasuries in their foreign exchange reserves, because people were losing faith as a result of Donald Trump. People were losing faith in the US dollar and the US treasuries, and also because of the big, very large US debt and deficit. So that hasn't gone away. That's still the case, and I think that there will be a sort of a floor for the gold price because of central bank buying. For that reason, what exactly it is, I don't know, but I think we're probably approaching it.
Because the central bank buying also relies on strong sovereign balance sheets, and that's an interesting part of the Iran war. Is this talk of Abu Dhabi and Dubai and Bahrain having to liquidate some of their offshore investments because all of a sudden they've got a cash flow crunch from the loss of oil sales. So I think it's the Abu Dhabi investment fund that owns 20 or 30% of the Brisbane toll roads in joint venture with Transurban. So it's the same with gold. I mean, if you're Russia, you haven't got the spare cash to keep your gold reserves. You've got to sell gold to fund your war. So I think there's in a sort of a war situation where there's also risk of a global recession, there is an element of all holders of gold, including central banks and governments, needing to liquidate into cash to repurpose those assets for other more pressing needs. So I think central banks probably can't afford to keep stockpiling gold in the current environment.
We might have to skip Felix's question. We're starting to run out of time. We'll go to Yas, who says some countries use income splitting to apply income tax at a household rather than individual level. Given how common it is for a household to have one high and one low income earner, e.g. with kids, with someone working part-time, would this work to make tax fairer and ease the cost of raising children? And he gives an example of two people earning 100k and one person on 200k and so on. Look, I think that would be one way to reduce income taxes. That's kind of it's just simply another way of having a tax cut. And I think that it's true that we tax incomes too much. The top marginal rate of tax kicks in too low. I don't think the marginal rate is too low. It's 45 plus the Medicare levy, and I think that's okay, but it just kicks in a bit too low, don't you think, Stephen? So they need to cut it in some way, and maybe that's one way to do it.
Yeah, we're over reliant on income tax, and you need to reduce that reliance. So this would be one way of doing it, but it would also make divorce more complicated. And how does it work for de facto couples? So just allowing couples to commingle from a tax and an income point of view, it would add complexity to the system. And a lot of people say that the problem with Australia's system is there's too many deductions and it's too complex, and we'd be a whole lot better off if the overall tax rates were lower and there were less deductions. So I'd probably be against adding further complexity with an income splitting model, albeit we need to cut income tax overall because it's punitive, and the top rate kicking in at 190,000, as I've said before, is outrageous and leaves a lot of people hard up. And Alistair, our last questioner, he's one of those people who's talking about it. Alistair's story is that he is worried about the changes to the capital gains tax that's likely to be announced in the budget. So Alistair is 40 years old, doesn't own property, and as a small business director, most of Alistair and his wife's net worth is tied up in their startup business. And while it's doing well so far, he's paying a significant amount of income tax on the profits that the business is making. And then he goes on to talk about many of his friends who've put their money into buying a house, and the house has gone up in value, and they're doing better than him because the family home is so much more tax preferred than someone like Alistair, who's taking a risk, employing people, being productive, but he's finding that the system is punitive against him, and he's very worried that it's going to become even more punitive because they're going to reduce the capital gains tax discount. If he was ever to sell his business to perhaps try and buy a house, he'd be paying 20% capital gains tax if he was on the top rate. So I don't know. I mean, what do you think, Alan? I agree that it's too tough on business, and I would support taxing the family home to provide a bit more income to make life less tough for small business and just general income earners. But do you think Alistair's running a fair argument to not reduce the capital gains tax discount? Because people always think it's just on investment properties, but it's actually on all investments, including small businesses. It's not just negative gearing on housing, which would be affected by a reduction in the capital gains tax discount.
I think capital gains tax is particularly tough on startup businesses because their base is zero, right? They're starting from nothing. And that was the case when we sold our business, Eureka Report and Business Spectator. We started off, the base value was zero, and we sold it for whatever we sold it, and the tax applied to the entire sale price. It's not as if we'd bought the asset and then sold it, and so that the base was the buying price, like you do with most things. So I think capital gains tax is particularly hard on startups for that reason, and increasing it, would really be a blow to startups. So maybe there's a way of doing it so that if you have a startup business, you're still on 50% discount, but if it's an asset you've just bought, maybe it comes down to 33%. I mean, I think there's a case for going back to inflation adjustment rather than a simple discount, which is what it used to be before 1999. You just deducted the CPI on the basis that you shouldn't have to pay tax on the increase in the value of your asset that's come about as a result of just inflation. And so, and the idea of the discount of 50% was simply to replace that. But it's a problem. It's much simpler, but it's kind of too big a discount probably. I mean, I think there's a case, it's probably worth about 33% now, which is what they're talking about cutting it to. But I think the thing is that, that'll change again over time. Inflation goes up. Probably with the inflation rate, if the inflation rate goes to 5%, then the 50% discount is correct. Is the right discount for a CPI adjustment. But when inflation is 2.5%, which is what the Reserve Bank wants it to be, then it really ought to be less than 50%. But so I think the thing to do would be to go back to inflation adjustment. But even though it's complicated, accountants can do it. It's not too hard.
And just finally, I won't read the whole of Felix's question, but while we're speaking about inflation, he was challenging the 2 to 3% target. And I thought I'd ask you, Alan, why isn't it 0 to 1% target? Like, where did we settle on 2 to 3%? Because there's a lot of people who are angry with the 2 to 3%, and that's the people with all the mortgages who are copping these rate rises because inflation is above this 2 to 3% target, and they're saying, as Felix says, I don't care if inflation is 4 or 5%, don't smash us with all these interest rates. So why are we so obsessed with this 2 to 3%? And if we're so obsessed about inflation, why isn't it 0 to 1%? Like, where did 2 to 3% come from? Why is that acceptable? Should be zero, shouldn't it?
Well, so they've said that basically they're saying that they want to have some inflation. They want prices to rise every year, because if prices don't rise, then people tend not to spend. If you think the prices aren't going to rise, you really.
So you wait for them to get cheaper. Effectively, is what they're saying. So you've got to have some inflation, otherwise people will keep waiting for the price to fall.
Yeah,
of a non-perishable product. Wow, that's interesting.
No, well, I think that there is that sort of argument. That's why they're going for 2.5%. It's actually not a 3% target anymore. They say it is, but actually what they're going for is 2.5%. And the problem, I think, my view of the 2 to 3% target is that it should be allowed to go below 2%. I think that it should be the target ought to be something like 0 to 3%, because when inflation was 1.5% between 2015 and 2020, they tried to get it up to 2% by cutting interest rates. And the result was we went into the pandemic with the cash rate at 0.75%, and they had nowhere to go. I mean, they were cutting rates, drastically over, 5 to 10 years to try to get inflation up to the target, and it just took away their room to move. And when we actually had a crisis, they could only cut the cash rate to 1.1%, and then had to print lots of money, and they were, it was a mess.
And the thing I can't work out is they accept the past blowout in inflation and never try to claw that back. So when inflation peaked at 6 or 7% post-pandemic, shouldn't the target have been reduced to, and next year we want prices to come down by 3% to get back to that long-term average, 2.5%? But they just bank the 6%, and then they just bake it in, and they say, right, 2 to 3% from here. So, I think overall inflation has been too high since COVID, and there's been no ambition to get it back to what it was pre-COVID, adjusted to 2.5% a year. People just accept we had a bad year, and now let's just keep rising on top of that bad year.
Yeah, but if you're going to get prices, if you're going to claw it back, get prices to fall, you have to have a recession. No one wants that. What are you talking about, Stephen?
No, just if the price of milk goes from $2 to $3, then it should go back to $2.20 when the price shock is finished. Like, COVID was a price shock, but the prices never came back down after the shock. Some of them did, oil and others, but overall it didn't. Anyway, I know I'm on a hiding to nothing here, boss, but I just thought I'd have that quick rant.
You're absolutely on a hiding to nothing.
Hiding to nothing, as usual.
Give up, Stephen.
All right. Great.
Well, thanks everyone for listening.
Alan.
Great to talk to you, Stephen. Thanks very much. And thanks to everyone for listening to today's Money Café. I'll be back next week with James Thompson. Send in your question to the Money Café at intelligentinvestor.com.au. So until then, I'm Alan Kohler, Editor-at-Large of Intelligent Investor and finance presenter and columnist for the ABC.
And I'm Stephen Mayne. Look forward to talking to you in a fortnight.
Thanks for listening to today's episode of the Money Café. If you'd like more, join Intelligent Investor's Essentials subscription. Visit offer.intelligentinvestor.com.au/Money Café, and you'll get my weekend brief, talking finance and CEO interviews. Sign up now for just $297, and we'll give you a free limited edition Money Café cap, plus Intelligent Investor Premium, free for 3 months. Get in quick at offer.intelligentinvestor.com.au/Money Café. T's and C's apply.